stocks are trading in the red right now. Joining me from sunny California to talk about market action is Oliver Pursche, Chief Market Strategist at Bruderman Brothers. Welcome.
Thanks, Alex.
So what's going on today?
Well, I think you're seeing a little bit of a sell-off. It's probably mostly commodity-driven as oil prices continue to sink and are signaling a general slowdown in global demand. And that's kind of unnerving investors. Keep in mind that we've had a 750-point rally in the last few days. So all things considered, it's still a good week for investors.
What do you make of the drop in Caterpillar today?
Well, again, it's a global demand. Caterpillar had a few very strong days. It was leading amongst the Dow stocks, and it's a sell-off. The story continues to be on a global macro basis. How much is the Fed going to tighten, and what will the economic impact be? Keep in mind, they're not just raising interest rates, they're also deleveraging their balance sheets. So that has a compounding effect. And the concern amongst investors for the last few months has been that they're going to go too far with these efforts, and that's going to create a real slowdown. And of course, you're still dealing with tariffs, you're still dealing with a global trade war. So there's a number of issues that could negatively impact growth rates around the world for 2019, and that's being reflected in these names.
I'm talking about rate hikes. U.S. producer prices came in strong today, and investors worry about rate hikes. Are you worried?
Well, you know, I'm at the Ernst & Young Strategic Growth Forum with about 800 of America's top entrepreneurs, and then speaking with them, they're very much concerned about rate hikes, the cost of capital, and the impact that tariffs and a strong dollar are having on their pricing ability and input costs. So yeah, I would say that that's a very big worry, and it's certainly something that we look at from a portfolio level as well. Which companies are most susceptible to tariffs, which companies are most susceptible to input prices, commodity prices, and how is that going to impact their earnings in 2019? So that's something that investors should pay attention to.
And you mentioned trade. China released weak data on producer inflation, domestic demand, manufacturing, and even car sales. How is this going to affect us?
Well, I think it's part of the overall story with regards to trade. I think China is very carefully and slowly re-engineering their economy to be more of a domestic consumption-based economy as opposed to an export economy as they've been for the last 25 or so years. That is something that takes a long time and always comes with growing pains. So I think you're going to see more mixed data out of China. But overall, our thesis on China continues to be that they're going to be successful in engineering a somewhat of a soft landing, and it won't be a worst case scenario over there. So we're actually looking at China as a buying opportunity at these levels.
And one stock that is actually up today, Disney. What do you make of this?
Yeah, so Disney is one of our core holdings in our large cap portfolios. We love Disney. It has done a great job in terms of building content. They're now moving on to the online streaming business. And so, you know, we think that Disney is poised to just continue to develop new revenue streams, which is what's so important for these large companies. Are they able to develop new revenue streams? And Disney is demonstrating that they're able to and willing to do what's required there. So we continue to be bullish on the stock.
Thank you so much.
Thank you, Alex.
My guest was Oliver Pursche, Chief Market Strategist at Bruderman Brothers. I'm Aleksandra Michalska, and this is Reuters.